Joining us to tell us what they see in the charts, Carter Worth, Chief Market Technician for Oppenheimer Asset Management, and Joe Granville, author of the Granville Market Letter. Good to have both of you with us. Carter, you're here with me. So what are you today, bull or bear?
Yeah, you know, here's our thesis, that the market has properly repriced the downdraft of obviously late 08, early 09, and that this is one of those rare moments where it's actually going to be directionless. And what we're looking for to actually get further strength from here, from our point of view, is a broadening out, not so much in terms of number of securities that are participating, but the marquee names have to come to life. Here, I've got you one chart I think is quite interesting. This is the Value Line Arithmetic Index, right, which is a very long-standing and important composite. It's up 43% year to date. Compare it to an equally broad index, the Russell, which is 2,000 names, so 1,700, 2,000, then 500. But the key distinction is these are both market cap weighted. This is equal weighted. And what that means is basically at this point, the average stock has already moved above where it was pre-Lehman.
But it's the big names.
The big names are lagging.
The big market cap heavy ones that are lagging.
That happens whether it's a bear market rally or a new bull. The low quality ones come first. But in order for it to really to mean that we've entered a new bull phase, the marquee names, the laggards, need to really start to come to life. It's the Walmarts, frankly. It's the Procter &
that we need to see.
They're the big weightings, and they are not they're not participating in a proper sort of way. Yeah.
Joe, what do you think about that argument?
Well, first of all, let me say I'm delighted to speak with you because, in my opinion, you are the queen of CNBC.
Now, you are very, very kind to say that. Thank you.
Now, on the market itself, contrary to most people I listen to, this market is going to go straight up over the next 2 years. Everyone's worried right now about September and October. Now, I tell you, my numbers are telling us that September and October will both be strong months, and therefore, I have no qualms about any near-term declines at this time. Furthermore, as you know, I invented something called unbalanced volume. It's based on volume and the derivatives of volume. And as you know, the Wall Street Journal has removed all volume numbers from individual stocks. And on top of that, right now, I'm pushing, as I have at the beginning of every bull market, and they always start first. The first sector to go up in a new bull market are low-priced stocks. And here again, I have to draw attention to the legendary architect Frank Lloyd Wright. You know what he did?
Falling water, and I'm sure something else more market-related.
Well, you know what he said in one sentence? He said, we always rebuild starting from the bottom. How does a bull market start? From the bottom. And therefore, I started with this bull market. Again, as all bull markets, I start with the low-price stocks, $1, $2, $3, $4 stocks. Now, on top of that, let me capsule that to a very important observation. When a stock doubles, you should sell half your holdings. That means the other half costs you nothing. Free stock. Now, we do that not only once, but when it doubles a second time, we sell that half of that portion. And on average, we'll do that 3 to 5 times. Now, if we do it the full 5 times, a $1 stock will go all the way to $32 stock. And that means a 3,100% rise. I'm looking at the average gain in a bull market, and I think we have another 2 years at least to go in this bull market. Therefore, I'm looking for most of my recommendations to go up from $1 to $8 on $1, and which some of them we bought for as little as 50 cents in the last few months.
So, Carter, what do you think about that? I mean, that strategy, and in particular, what would be your best strategy right now to somebody who's not sure which way we're going?
Well, no, here's the thesis is that you have to capture those gains. That's exactly what's happened in every bear market rally and/or new bull. It's the low-quality names that come up first. $1, as Joe refers to $8. It's time to redeploy those gains into the large cap laggards, because the presumption is that they will outperform on a relative basis either way. Either the market starts to flag here, falter, and the large cap names that have not done well are sort of safe haven, or the market continues, let's just say it's a coin toss, and the large cap names will ultimately catch up and participate in a more meaningful way. So we think the proper approach is to realize gains in these very dynamic low price ones and to redeploy the capital.
All right, well, thank you very much. Carter Worth, Joe Granville, to both of you. And for those who say, well, what names does Joe think is going to go up the most? 3 that he likes that you can write down are Lazy Boy, LZB, Nanometrics, Nano, and Eastman Kodak, EK. All right, coming up, the great carbon mistake. An environmentalist who says we've got